There is a specific kind of man the modern economy is designed to produce. You've seen him at the dealership on the Saturday morning. He's in his early 30s, dressed well, standing with the posture of someone who has finally made it. When he sits across from the finance manager, there is no tension in the room. He hands over his information, and within 60 seconds, the screen flashes a bright, celebratory green. The manager's tone changes instantly. It's no longer a negotiation. It's a welcoming ceremony. He is a Tier 1 customer. He has the 800 credit score. He gets the 1.9% financing, the waived fees, and the keys to a $60,000 truck that smells like success. To his neighbors, his parents, and his peers, he is the gold standard of adult responsibility. But if you could look past the leather interior and the high-definition dashboard, you would see a man living in a state of permanent, quiet fragility. He has less than $3,000 in his checking account. He has a mortgage that consumes 40% of his take-home pay. He has 3 different premium credit cards that he uses to bridge the gap between his lifestyle and his paycheck. He is perfect in the eyes of the bank. And yet, he is exactly one corporate restructuring or one major medical bill away from losing everything he's worked for. Have you ever stopped to ask why the system is so eager to reward a man like that? Why is the red carpet rolled out for the man with the massive debt and the high score, while the man with $100,000 in cash and no credit history is treated like a ghost? It's because we've been taught to look at the wrong number. We've been told that a credit score is a measure of our financial health. In reality, it is something much more clinical. It is a yield forecast. The ghost and the value target. To understand how the machine actually views you, you have to look at the 2 men it fears and the 2 men it loves. Imagine 2 men walking into a bank. The first man, we'll call him the ghost, has lived a life of absolute discipline. He's 40 years old and has never borrowed a dime. He saved his way through his 20s, bought his cars with cash, and currently has $100,000 sitting in a liquid account. He owns his time. He owns his life. But because he has no history of debt, his credit score is non-existent. In the digital eyes of the bank, he is a thin file. When he asks for a mortgage, the system stutters. He is treated with suspicion, if not outright rejection. The second man is our value target. He has $400 in his savings account, but he has 20 years of on-time payments. He has a revolving door of car loans, personal loans, and credit cards. He is constantly moving money, constantly paying interest, and constantly refreshing his score. The bank doesn't just like this man. They need him. They don't see his $400 balance as a risk. They see his 820 score as a guarantee of future labor. They know that this man will sacrifice his sleep, his health, and his family time to make sure that gold medal score never drops. The ghost is a problem for the bank because he cannot be monetized. He has options. He can walk away from a bad deal. He can survive a job loss without panic. He is a dead zone in their revenue model. The value target, however, is a high-yield asset. He is reliable enough to keep the payments coming, but vulnerable enough that he can never afford to stop. The $25,000 deadbolt. There is a specific numeric line where your value to the system peaks and your personal freedom plateaus. It is the gap between your score and your liquid cash. For the average American male, that line is $25,000. If you have an 800 credit score but less than $25,000 in liquid cash, you have reached what internal bank risk models call optimal compliance. You have enough credit to be a major consumer, but not enough cash to be a free agent. At this level, you are locked in. You have a high-status lifestyle that requires a Tier 1 income to maintain, but you lack the escape velocity of a significant cash buffer. You are effectively a high-performance renter of your own life. The $25,000 deadbolt is the point where you stop being a customer and start being an employee of the financial system. Every morning you wake up, you aren't working to build your net worth. You are working to maintain your credit worthiness. The system doesn't want you to be wealthy. It wants you to be preferred. And those are 2 very different destinations. One leads to a quiet bank account. The other leads to a shiny metal card and a life on a treadmill. The penalty of achievement. There is a moment in every responsible man's life that should feel like a victory, but instead feels like a glitch in the matrix. It's the day you write the final check. Maybe it's the car you've been paying on for 5 years, or the personal loan that's been hanging over your head since your late 20s. You hit send, the balance drops to zero, and for the first time in years, that portion of your income belongs entirely to you. You expect the system to acknowledge the feat. You've fulfilled your contract. You've proven your word is gold. And then, 48 hours later, you get a notification on your phone. Your credit score has dropped 20 points. If the score were truly a measure of financial health, this wouldn't happen. Paying off a debt is the definition of becoming more stable. But the algorithm doesn't care about your stability. It cares about your activity. When you eliminate a debt, you aren't winning in the eyes of the bank. You are churning. You have effectively canceled a subscription to their primary product. The score drops because the machine is designed to nudge you back into the game. It's a quiet, digital reminder that you are only valuable when you are participating in the cycle of borrowing and repayment. The moment you step off the treadmill to count your own money, the system marks you as inactive. It's the most honest moment the banking system ever has. It's the moment they admit that the score isn't for you, it's for them. The stress fingerprint. Most people believe the bank is looking at their history to see if they can pay, but at the Tier 1 level, the bank is looking for something much more specific: your stress fingerprint. They aren't just tracking your payments, they are tracking your behavior under pressure. When you have an 800 credit score but zero liquid savings, you leave a predictable trail. You are the man who uses buy now, pay later for a new set of tires. You are the man who accepts a credit limit increase 3 days before Christmas. To a lender, this isn't just good credit. It's a map of your vulnerabilities. They know exactly what it takes to get you to move, and a reactive man is a predictable man. Predictability is where the highest profit margins are found. When you have $100,000 in cash, your stress fingerprint disappears. You stop reacting to promotions. You become illegible to their algorithms. To the bank, a man who cannot be predicted is a man who cannot be controlled. This is why the ghost is treated like a risk, not because he might not pay, but because the bank doesn't know what it takes to make him panic. Here is the chilling truth the system hides behind the bright green numbers on your screen. If your savings disappeared tomorrow, your credit score wouldn't change. But if your credit disappeared tomorrow, your life would. Think about that. You could lose every cent of your survival capital tonight. You could be staring at a $0 balance, unable to buy groceries or pay for a medical emergency. And as long as you haven't missed a payment to a bank, your credit score would still be a perfect 800. The system would still call you a VIP. It would still offer you platinum status while you starve. Because the system doesn't care if you have money. It only cares if you have the permission to move money. But if your credit score vanished, your life as you know it would end. You couldn't rent a home. You couldn't buy a vehicle. In many industries, you couldn't even keep your professional license or your job. Your credit score isn't a measure of your wealth. It is the social credit of the West. It is the tether that keeps you attached to the machine, and the machine doesn't care if the man attached to the tether is actually healthy. It only cares that he is still there. The outsourced manager. The banking system has successfully outsourced your management to your own FICO score. You don't need a manager to stand over your shoulder at work and tell you to stay late. You don't need a boss to threaten you with a layoff to keep you compliant. Your credit score does that for you. Every time you think about taking a risk, starting a business, or walking away from a toxic environment, you look at that 3-digit number. You realize that non-compliance would destroy 20 years of status. The system has turned your own sense of honor into a cage. They have convinced you that your reliability to a boardroom of strangers is more important than your own structural independence. The man with the 800 score and no cash is the ultimate employee. He doesn't work for his paycheck. He works to service the yield forecast he promised the bank 5 years ago. He has traded his ability to say no for the privilege of a low interest rate. The power of the exit. Something fundamental changes inside a man's mind when his survival is no longer tied to his reputation with a lender. Think about the two men from the bank lobby, now sitting in a corporate office on a cold Monday morning. They both work for the same company. They both face the same restructuring announcement. The man with the 800 credit score and the $25,000 deadbolt feels a sudden, sharp spike of adrenaline. He isn't thinking about his career path or his next project. He is calculating the minimum payments. He is mentally tallying the mortgage, the truck, and the private school fees. Because he has no margin, he is a price taker. He has to accept the new terms, the longer hours, and the diminished role. His high credit score has effectively stripped him of his ability to negotiate because he cannot afford the cost of a transition. Now look at the ghost. He still values his job, but he doesn't need it to survive the month. He has $100,000 in liquid cash, years of breathing room. When the restructuring hits, he isn't reactive, he is observational. Because he isn't forced to say yes to survive, his value in the room actually increases. He can speak the truth. He can set boundaries. The system treats the first man like a valued partner while extracting his life force. It treats the second man like a risk because he possesses the one thing a bank cannot monetize: the power of the exit. True leverage isn't the ability to borrow money at 2%. True leverage is the ability to look at a bad deal and walk away without checking your phone to see what it will do to your score. The invisibility signal. As you move out of the value target category and into true stability, you will notice a strange, quiet shift in how the system treats you. The aggressive, pre-approved offers in your mailbox will begin to slow down. The exclusive personal loan invitations will vanish from your inbox. The personal bankers who once called to check in on your goals will go silent. In the world of high finance, this is known as disengagement. To the bank, you have become a low-priority customer. You are no longer generating the heat of friction. You aren't triggering overdrafts, you aren't carrying balances, and you aren't seeking relief products. Most men see this silence as a loss of status. They feel like they've been downgraded because the red carpet has been rolled up. But this silence is the ultimate signal of victory. It means you've successfully opted out of the broke tax. You have moved into the second class of the financial world, the class of the deadbeat. The industry calls you a deadbeat not because you're unreliable, but because you are too reliable. You move money through their infrastructure without letting the system take a bite. Invisibility is the proof that you have outgrown the machine. You are no longer a yield forecast for their shareholders. You are a sovereign agent. Structural indifference. The goal was never to destroy your credit score. That would be reacting to the system rather than rising above it. The goal is to reach a state of structural indifference. You keep the 800 score as a tool, but you treat it with the same emotional attachment you'd give a hammer in a toolbox. You use it to secure a primary residence at a fair rate, and then you put it away. You stop checking the app every week. You stop chasing points like a gambler chasing chips at a casino. You become a financial ghost who happens to have Tier 1 access. You build the buffer until the interest you earn from your own savings is higher than the interest you'd pay on a loan. You move your capital to where you are the lender and the bank is the borrower. When you have the cash, the bank's psychological leverage evaporates. You stop seeing a credit limit as spending power and start seeing it for what it is, a liability disguised as an opportunity. You stop looking for the system's approval and start looking for your own stillness. The signal of the winner. In a world that screams at you to be a value target, to be the man who borrows well and spends often, The greatest act of rebellion is to be unremarkable. The system is designed to reward motion. It feeds on the panic of the emergency, the rush of the upgrade, and the pressure of the deadline. When you become stable, when you build a fortress of liquidity that the bank cannot touch, the engine stalls. Real financial freedom doesn't look like a platinum card or a preferred status. It looks like boredom. It's the car repair that doesn't trigger a phone call to a lender. It's the job transition that happens on your timeline, not the bank's. It's the ability to wake up on a Tuesday and realize that you don't owe a single cent of your future effort to a boardroom of strangers. There is no gold medal for the interest you didn't pay. There are no Super Bowl ads celebrating the man who decided that $100,000 in the bank was worth more than an 850 score. But there is something better than the system's approval. There is the quiet, unshakable authority of a man who owns his own life. Stop playing for the score, start playing for the margin, and realize that the only way to truly win a rigged game is to become the one person the machine can no longer afford to track. The system needs you to have a high credit score and zero savings because it needs you to stay in the sweet spot of stress. Break the cycle, build the buffer, and become the customer they hate.